Hey, what's up, everybody? Coming back with another video talking about today's topic is talking about perspective and why it's important to have perspective when it comes to not just everyday life, but also when it comes to trading. So you think of something as small as a bottle cap, or maybe like something as small, as a quarter. When you look at it from afar, it doesn't take up much of your field of view. But of course, if you were to then put that right in front of you, it then begins to obscure your ability to see. And sometimes our everyday problems can be just like that. We could have problems that, in the grand scheme of things, are very small. But when we take those problems and we put them right in front of us, it becomes the only thing that we can see. And it makes the ability to make sound decisions more difficult because our vision of what's going on is obscured by whatever it is that is taking our attention. And of course, that can happen during the trading day, especially for new traders who are looking to day trade and you're trading using 1 minute candlesticks. A 1 minute candlestick is a very small perspective into the grand scheme of things of what is going on within a particular stock for the particular day, for the particular week, for the particular month, for the particular year, or in the life of the stock. And so today we're going to be reviewing an actual YouTuber who actually posted one of his trades and showing how, if they had just a little bit more perspective, that the trade might have gone a different route. So looking at ClayTrader, who is a known YouTuber, trading Roku. This was posted on January 2nd. And of course, it was posted on January 2nd, but the trade actually takes place on December 17th. Took me a little bit to find where the trade was because I couldn't find it in the chart. And then through his scrolling, I was able to see it down here, that this takes place on the 17th. So we're going to be looking at his trade with the overarching theme of perspective. Let's roll the video tape.
5 minutes. Pretty sure I'm going to watch Roku out of the opening gate, so let's see what happens. And I think this thing wants to get back over 137, this bounce.
So right from the very beginning, he says, I think that this stock wants to go over 137. My question would be, just looking at the chart and talking about support and resistance, where is your resistance going to be? Right here, right? You see the stock gapped down, immediately rallied, tested that 137.50, fell short. The very next minute breaks through where the market rallied at the open, right? So now I know that there's resistance here, but there's also a support here at the 135, resistance at 137.50, right? And so he's saying, I think that the stock wants to go above 137. But I know 137 also, where the market tested here, fell short, and is now testing again and looking like it's going to fall short, is telling me as a trader that there's a lot of weakness in this stock. And of course, I would be very careful about going long.
Right here seems pretty strong. So I'm going to keep a little bit of a closer eye on it. And if it can creep its way up there, like I said, I think it wants to potentially make a push above 137. Market's been open here 5 minutes. So there we go. So let's see if this thing can get up over 137.
Right. And so if you're a day trader and you use the level 2, the level 2 can create a lot of anxiety. It's visually disturbing, just like looking at a 1 minute candle. 1 minute candle, watching a 1 minute candle drawdown can create anxiety within you that can be easily removed just by having more perspective on what's going on. So he's long at 130. He's long just about at 137. And I already said 137 was an area of resistance. So he went long at the resistance. And of course, me knowing that there's going to be resistance here at the 137.50 because the market reacted right here, right? The market overbought. It overbought over here, which is what's represented by the wicks. Right? You have the wick or the tails on this end where the market oversold. The reaction of the market rallied. The market overbought. Reaction of the market sell off. Same thing here. Same thing here, here, and here. So let's watch them trade.
I'm in at 136.90.
He's long at 136. He's long at the resistance. Important to understand that. And so if you were watching this trade, where would you think that you might find some resistance? Probably like around here. And the grander scheme within the past 5 minutes is 135, is the grand scheme of resistance, right? Or support, I should say. Within a 5 minute, within a 1 minute candlestick, within the 5 minutes that's gone by.
So let's see what it wants to do.
Right, so if you pulled up Roku at this very moment, those are the immediate things that should stick out to you. Resistance at 137, support at 135, and then watching the stock to see how it plays out. Those are the first two things. If you just walked into the room, you just powered up your computer, like, oh shoot, Roku's trading here. All right, I got resistance at 137.50, confirmed by this candlestick.
Okay, got another 500 down there.
Confirmed on volume, and I see there's a little bit of support here at 135. Let's see how it plays out. Right, so he went long at the resistance, and the immediate reaction by the market is to sell, right? Like I said, you want to see how the market reacts to support and resistances. The market's reaction is, whoo, we were overbought, right? We were overbought. Who the hell was buying up here at 137? Let's bring that bad boy down.
So just have 1,000 shares at 136.36.
That's damn chair.
Okay, picked up some more.
Picked up some more. Right. So like I said, the support is 135. So he's averaging down. He bought all the way up here at the resistance, and then is buying a little bit more closer to what would be his support. But something to consider is, one, you're getting increasing volume. Two, we completely engulfed this candle. The other thing is that we're below the bottom of this candle. So lets me know that there's increasing sell volume. The stock is weak to the sell side. And so I see a little bit of a wick on the 1 minute, and I start to think, okay, the market was saying that there's we were oversold, right? We were oversold from whatever the bottom of this candlestick is to the bottom here. That's the market's. And what does the market immediately do? Does the market rally? No, the market begins to sell.
So let's see if this thing wants to get the bounce going.
And so now I'm seeing lower lows, right? This is something that should be noted within the 1 minute candlestick. The stock is making lower lows, right? Lower low, lower low, lower low. In terms of the pattern, right? Not in terms of making a new low for the day, but in terms of the bounce, right? It's making a lower low, and the wicks on the candlesticks are lower. Lets me know that there's a lot of strong selling, which is denoted by the volume, right? You can see the sell volume is matching the buy volume.
So it's starting to bounce here.
Right, and again, like I said, 135.
Gotta see if the buyers want to keep on coming up.
A break of 135 would be a sell signal.
So watch that bid side.
And so now I know that the market is going to react to like 136.50, right? Because that's where he's using VWAP. So if you're going to utilize like moving averages and Bollinger Bands, then you have to use them, right? So I would pay attention and see how the market reacts at the 136.50. If the market was to sell off, that would indicate to me that that's expected, right? Because I'm expecting other traders who use these exact same tools to trade off of them. which people do.
It is trying here. $135.70s though definitely being the current problem.
So the market's having a hard time breaking the high of this candlestick.
There we go, getting through.
And then the market does.
Now trying to get above 36.
But again, he's long at not a great price. And so again, like I said before, you want to see how the market is going to react, because the real resistance is at 136.50. And so again, when I see those long wicks, it lets me know that the market believes that the stock was overbought, right? And boom, there comes the increasing volume on the sell side, right? And there's long.
Okay, I'm now short.
Those long drawdowns this right here is what kills a lot of new traders. When you're misreading what the market is telling you, this is what happens. The market is very punishing, and these are real dollars that you're trading with. And if you're trading for a living, $2,000 is quite a bit of money. If you're averaging $500, $600, $700 on your upside, so take a $2,000 loss is very punishing. That's days worth, especially if you're only making 500, 600 a day. That's literally 3, 4, maybe even 5 days worth of losses that you have to make back. Not to mention the psychological feeling that happens when you take losses like this, when you're just misreading what's happening on the market. And again, this is relative to, like I said before, not having perspective. And we'll look at, because people might say, well, looking back at somebody's trade, it's real easy to, hindsight is 20/20, and we'll discuss that in this video shortly.
1,500 shares.
So again, now he flips short, right? So like I said before, we knew 135 was where the market was retesting. It tested here. It tried to break through here. Subsequently, it didn't. And then boom, big sell volume comes in. Why? Because that 136.50, the market was represented right here by overbuying. So the market showed that the stock was overbought. This is what this means within that 1 minute. And the sellers immediately came in and sold below and shorted below the 136. The moment it touched 136, the market's reaction, other traders' reaction, it's important to say it that way, other traders' reaction is to sell.
At 134.
And so, like I said, 135 was your support, at least for the 1, 2, 3, 4, 5, 6, 7, 8 minutes that the market was open for this particular trade. And so the market's reaction, other traders' reaction is, we're breaking below 135. Let's go.
82
on volume.
So let's see if we can get a breakdown now.
Look at that sell volume. So if you went short and you were short at 135, now your next question is, where would you cover, right? Because what confirmed the trade short, right? The break below 135, the out also has to be confirmed in the same way, right? Through a breaking of a new low and on increasing volume confirms for you to remain short or to go short, right?
Down through the 134.50-ish area.
So we broke through 135s. We went down 50 cents.
Because there is officially a lot of downwards pressure on this thing now.
Now he believes there is downward pressure. The stock is down $3.50. And so we see the market is kind of stalling
There's
here.
the break.
And the market stalls for a reason, which we'll go over. The market stalls at the 134 for a reason. And then That sound right there that you can hear is anxiety. That is the sound of anxiety. When you're down 2,000 and you're trying to make your money back, there's a lot of anxiety, especially when you don't have the perspective of the uncertainty of where the stock is going to go. Why am I short, right? Am I short because it broke 135, or am I short because I just see this big red candlestick go down, so I might as well go short since the long didn't work?
Can it get down through 134.20?
And so the market is stalling at 134s for a reason, which, had he known, he would wait and watch for the market's reaction and see what the market does. Because I know I'm short at 135, and I know if Roku's down $4, it can go down more, because $4 is not percent-wise a big chunk of a $135 stock, right? This stock can move down a point like that, no problem, because a point that only is a small representation of what the overall.
So it took out 500 shares.
And of course, he's getting out. But you can see, like I said before, where the market is trying to test for that 135, which is way up here, and it's falling short. You can see, which is represented by the market saying this is representation of overbought. You guys are buying the stock up. No, let's sell this stock down.
Let's see if we can get a flush down.
So if you're short and you're seeing that the stock is having a hard time, breaking through that 134.50 area, well, then what I would watch for is how the market is going to react at 135, right? Because I'm not worried about taking $1. I'm thinking the stock is going to move several dollars.
So it's trying for that break.
And again, like I said before, that this stock has given multiple indications where you should have been short from 137, realistically speaking, and the market never gave an indication that you should have covered your short, right? Because that was confirmed by the inability to break 137s here and here, and then a subsequent lower retest, and then a breakthrough of the intraday low on volume confirms that. Should I remain short? The market says yes. So the market is trying to retest 134s. And so we still see good sell volume here and here. Sell volume is still keeping up with buy volume.
There we go.
And there it goes, right? So if you were wondering, okay, should I cover my short? The market says no. But he covered.
So now I have a 500 shares left.
So at least he's making some of his money back, thankfully, because he was down $2,000. So at least he's making back some of his money. But it's important to understand, does he understand why he's getting out at the points that he's getting out, right? The market just confirmed. If you were wondering, should I cover my short or should I go long? The market confirmed with a flush down and increasing volume, no, stay short.
And all out there. So still down $1,000. But what I did was,
so I want you to pay attention. The stock here where he covers is 134, right?
I covered the 1,500 for a loss and then went short the 1,500.
But while he's talking, I want you to pay attention to this candlestick right here, right? So the market just broke through, and the market said, whoa, right? This candlestick immediately trying to push on volume, and the result of buyers came. There's a reason why buyers are stepping in here at 134. You're like, why are people buying this 134 with that huge flush on volume? There's a reason.
Shares, which allowed me
to
still mitigate and put myself in a position where, sure, still a loss, but not nearly as what the loss was when I first got short. So again, I covered, or
So you see the market is trying to retest, right? It's trying to retest what was looked at as the support, whether this is like a quarter, right? And the market is testing it, coming back, testing it, coming back, testing it, coming back on this intraday candle, and then going negative.
I sold 3,000 shares. I only own 1,500.
Then breaks again 134s.
So that let me cover my loss on the long side. And then it also allowed me to get the get some profits on the short side there, because I shorted at 82. I shorted at 134.82. Then I covered some at 134.52. Covered some at 134.09, and then covered some at 134.23.
But the market never told you to cover, right? The market never gave you any signal for you to cover. If anything, it was confirming that the market was going down, which you'll see shortly.
So I still may be interested in this one, but yeah, still a $1,000 loss. So not the greatest, but it is what it is. I have an order at 134.
So you might be thinking, well, look, it bounced, right? Again, remember, like I said, where did he cover? He was covering at 134. This was showing 134.12s, right? So that candlestick was right there, right? The candlestick that I told you that kept bouncing, coming down, bouncing and coming down. So what happened? The market tried to break through those 150s. The result, boom. The market went all the way down to 133, right? So he missed another $1 out of this trade on his short side. That was an additional $1,500 which would have completely wiped out the bad long that he started. And the reason why I said before was that why was it that people were stepping in at 134 is related to perspective. Had he just looked at yesterday's trade, yesterday's low, you would have seen where the market right here between like 10 o'clock and 11 o'clock had resistance level at 134. And so that's why you saw people stepping in at 134s and why they were buying, right? So if you were watching your position, you would have watched and to see intraday, okay, how is the stock reacting to 134s? Well, the market, it seems like they're stepping in and buying. But I know that I was short at 135. I'm willing to risk some of my shares. Let's just say I covered some of it. Let's just say I knew 134s. There was going to be resistance because I looked at the chart. So maybe I got out of some of my shares, right? Which I talked about before. Scaling in, scaling out, right? You don't go all in at one particular with one confirmation, just like you don't get all out on one particular confirmation, right? So let's just say I was in 1,500 shares. Let's just say I covered 500 shares, or I covered 1,000 shares of the 1,500 short. Then the market subsequently breaks. Anything after that, I'm just holding. But looking at the chart, the market reacts because it realizes that the stock was oversold, right? The stock was oversold at 134 or 133s. The market's reaction was to bring it back to 134s, which is exactly what immediately happens. We break down to 133s. The market's reaction over the next three candlesticks is to bring it right back. So at the very least, you might have been able to cover here. More than likely, at the very least, looking at the chart, I would have held my short and probably ended up covering somewhere around where we broke through the 134s. 134s would have been my stop. I would have probably missed the 133s and covered like between 133.50 and 134s, or at the very least covered within this candlestick, willing to give up that $1 because this stock could have tested 134s and came all the way down, and it could have kept on going down. The confirmation for the long was right here when the stock broke 134s, because that's where it's where I knew, looking at the previous day's chart, there was a support and a resistance at 135s, and then finally the market broke out from 135s to 138s, and then subsequently, like I said before, watching the remainder of this trade. Now, looking back at the chart, all right, knowing that, okay, the market oversold, which is representative by these three green candlesticks right here, and looking back at yesterday's chart, I might be thinking, okay, the market was oversold at 133s. The market represented that by these huge candlesticks showing, well, we were really oversold, buyers stepping in. Now I'm going to go long. So I'm confirmed long by my support at 134, by the market's reaction to going below 134 with volume, right? You can see the increasing volume, increasing price, stock trades higher.
Got those.
So he's short, right? So again, the confirmation has now switched from a short to a long position, which is confirmed by the increasing buy volume, the market's reaction to breaking through the 134 levels, which previous day was a support, and 135 resistance, where it traded in this channel for like 2 hours maybe, and then subsequently broke out on volume. You can see it. You can see the buy volume coming in right here and here, which causes the breakout.
15.
And so, like I said, we're
all out there.
We're long this trade now, right? Because previously we couldn't break 134s. It broke 134s and bounced immediately once it hit the 33s, right? The market's reaction was, we're too short, right? Buyers are stepping in. They're saying Roku is being oversold. We're going to step in at 133s and we're going to buy the stock. So like I said, the confirmation is now 134s is your support, right? Because it was your support down here that the market broke through. The market subsequently tested 134s and broke them, and is now coming back to retest the 134s. You guys sure you want those 134s? We want to find out, right? The sellers want to come in and find out. You sure you want those 134s?
There for 25 cents, which equated to $125. But if this thing wants to continue on up,
right? So the sellers step in at 134.50 because that's where we had resistance before, and they're like, oh, let's test those buyers at 134.
I'll be ready at 135. Just let me double check.
So all along this long confirmation, he's going short. And this is very deadly when you're taking the wrong end of the market. It also causes you to miss the big picture.
35.15. If this bounce wants to continue, I will keep you updated. Okay, I have an order. Oh, nice. I'm in there.
So he's short again, right? Short again. We confirmed, right? The buyer, what happened? What did I say before in that previous candlestick? Those sellers stepped in at the 134.50 mark, testing those buyers at 134 and the 133 is like, you guys sure you want those 133s and 134s? Let's sell this bad boy and see what happens. The market steps in and says, no, we're taking your 134s and we're taking 134.50s too, and we're going to 135. Let's go.
135.15 for my first 500. I think I captured the entry point on video. So let's see what this wants to do.
So like I said before, we're holding 134s long, confirmed long by the reversal, right? By the reversal, by yesterday's chart. I know looking at the chart, 135 is going to be problematic, right? It was problematic here for an hour. I could be in this trade for the next hour. The stock could bounce between 134 and 135. I don't know that as a trader. What I do know is 134s was a support. We did break through it. The market subsequently reversed with strong buying volume. So okay, all right, I'm long 134. I'm with you. But I know 135 is going to be problematic, right? Because I see it from yesterday's chart. And that's the value of perspective.
Let's see, what is that? Just double check.
And you see it right here. The market hits 135. It subsequently tries to back off those 135s. More buying volume steps in.
Checking a few things here.
And so he's short a scenario that the market is saying is long
135
with no
75.
confirmation to go short. And this isn't to say that he's not going to make money on this trade, but he's going the wrong direction. You're in essence what they refer to as fighting the tape.
Getting somewhat of a pullback here.
Right, so I said the market is going to test those 135s. And so we already know that.
See if it can work its way down.
From looking at yesterday's chart.
Closer to the 135 mark.
And so we see buyers stepping in. I guess it's coming to the VWAP and it's getting close to the VWAP and then subsequently bouncing off of it. Again, this is what you should be doing while you're trading, right? You should be watching the stock, what is happening, right? Everything that I'm voicing verbally is what you should be saying to yourself in your head while you're trading.
I will pause for the time being. All right, was making a move. I thought I might have gotten some up at 136 or 135.75, but as of now, it's pulling back here a little bit.
And so we saw previously where the market tried to subsequently break those 3650s. And so we saw it test here, 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 and then we saw a final test before the collapse was right here. And so obviously on an intraday chart, that's what we're seeing. We're seeing that same sort of resistance on the buy side that we saw on the sell side. So we're still seeing good volume coming in. You can still see that that's right here. You can still see good.
Try for some at 95.
Good buy volume. He's going short, right? So like I said before, where the market was stalling at this level, now the market is breaking out and it's breaking out on volume, right? You can see that right here. So these are things that we have to, like when I said, we're confirmed long at 134. Like I said before, confirmed long by the previous day's chart. I know that 135 was going to be an area where we might channel for maybe an hour or two, or there's going to be areas of resistance. I already know that as a trader looking at yesterday's chart. So I'm watching how is the market reacting to 135s, right? That area where there was resistance. Now I see that the market is using 135s as a support. So what does that tell you as a trader? These are all the things that you should be telling yourself while you're in this trade. Okay, market was using 135s and it kept bouncing off and selling off, bouncing off and selling off. Now the market is reacting differently. It's using 135s and now it's trading 135s as a support, right? So I'm confirmed long at 134. So now I know if the market breaks 135s, I may choose to get out at 135 and take my profits, but I could say, you know what? I know that this stock could go to 134 and I'll take nothing, thinking that maybe this stock will go back to 138. I have to wait for confirmation to get out. I was confirmed in by the market and by the volume. I have to be confirmed out by the market as well.
136.15.
So he subsequently goes short again.
So I have 700 shares now at 135.31.
So he's averaging down. We're shorting more as the market is breaking out.
We'll see if this thing wants to pull back down below the 30s.
And like I said, 135 is our support, right? The market, so the market could flush down to 135 again. But what's the overall arcing theme at this time? Long.
Okay, getting somewhat of a pullback here.
Right, the market tests 135.
Beautiful.
And what is the market?
And out there for nice.
Again, what is the market's immediate? So he got out, right, in this trade from 35.50, and this is where traders can miss the big picture, right? So we're, like I said before, what were we waiting for? We were waiting for a reaction of 135. What's the market's reaction? The market the sellers tried to step in and break through 135.
Nice little gain. And my
watch.
average is at 31, took 700 shares out at 135.09. So down $800 still, but much better than, I don't know what my original loss was. I think I was up over 2,000 had I not, when I went short. So I'd have to scroll back and look, but
he was down 2,000, not up 2,000.
Let's see what else I can find. Right, I think this thing wants.
Right, so like I said before, where patience comes in, as you can see that the market, you see the tails of the candlesticks. The tails represent where the market says you were oversold, right? Oversold, 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 right? And where is the candlestick closing, right? It's always closing above 135. So what happens within the candlestick is often not that important. It's where the candle ends. And this is where a lot of patience comes in, because you're like, oh, well, he made a good trade right here. But again, he missed the 134s to the 135.50s, 136s, right? It's 2 points he missed to clip, I think on 700 shares, he clipped like 20 cents maybe, right? So he missed a $2 long to clip a 20-cent short.
Oh,
And again, we are not confirmed out, right? Because like I said before, at the very least, even if you wanted to say, well, I want to take some profits, I'm in a 134, those 134.50s right there, look, the market's hitting 130, not even coming close to those 134.50s. So even if you were like, well, I want to take some profits, I don't want the stock to go negative, 134.50s is an ample area where you could take profits from. But again, not confirmed out. The market stated in 1, 2, 3, 4 candlesticks after, right? 4 candlesticks we've tested 135. Market says no, we're going long. Tested 135. No, we're going long. Market oversold the 135. Sorry, we are going long. I'm not sure what you're looking at. We are going long.
I was going to say, I think this thing wants to get over 135.50, and it did, and I was too slow. So that's all right. 136. $136.35 on the short side, just double checking.
So again, he's looking to go short.
So if it wants to continue its way up, I'll look to try to do some shorting up around 136.35. Okay, I'm in order.
And boom,
136.
Woo. So again, like I said before, this is where patience and perspective comes into play, where you have to be patient. Like for all those people that are like, oh, the price action is really quick within trading, you need to be really quick. I'm not sure, you need to get their exact price. It's not true. Looking at this trade, if you were watching for 135s and watching for the market to see how it was going to confirm, you had 1 minute, 2 minutes, 3 minutes, 4 minutes, 5 minutes, 6 minutes, 7 minutes, 8 minutes to make your decision of confirming to yourself, yes, 135 is a support. A break above 135.50 is a long to me, right? So the market finally breaks through 135.50s on volume, right? Buy volume. Look at the buy volume right here, and then the subsequent buy volume. This confirms you. These are all the things that you should be saying into yourself, into your head, while you're watching the trade. Everything that I'm voicing is what you should be thinking as a trader for this, in this trade, because this literally was a 134s to a 137 trade. The 1 to 3s that you hear about is a perfect example of a 1 to 3 on the short and a 1 to 3 on the long. You were short at 130, you were short at 137s with 138 as your out, and you were confirmed at the very least to watch a 134.5 to 134 reaction of the market, and that would have secured you at least 2 to 3 points on the short side. With a subsequent seeing the reversal, this is literally a 6-point trade within the span of a half hour. I really want you to understand that this is a 6-point trade in the span of a half hour, confirmed by the market just by having the perspective of looking at the previous day's trade to see how the market would react and watching how the market reacts. You have time, right? You have time.
85 in.
And then he goes short again. So he does make back some of his money. He was down 2,000. He does make back some of his money. And then, of course, later on throughout the day, he makes back some of his money. But he's wrong in terms of he is literally fighting the tape. He's saying, oh, this stock's going to rip up. I'm going to look for an opportunity to go short. Why not go long? Why doesn't he go long? Because he doesn't understand what's going on within this particular trade. Because he doesn't voice any of it. And you can tell by his reaction to going short. This is actually, all this time is where the big boys, the guys that make the hundreds of thousands of dollars, this is where they size up, right? They watch how the market reacts and they buy. They buy all this down here, right? And they're like, I'm going to wait for those 134s. I'm willing to risk the money. Because I know that the stock is going to go up. And if you look at the Roku trade traded all the way back to 137.50, right? So this is a very good example of, and of course, you could have played Roku all day, right? You don't need to sit there and have, these baskets of stocks and buying filters and all that shit that they make you do, that people think that you need. Because you can literally take this one trade and then looking at why would you short 137.50s, look at the chart. You can see it right there, right? This is where the stock capped up. I know as a trader, the stock market is going to pull back. And so looking at the rest of the day on Roku, you can see it, right? We came right back to that 137.50. What was the market's reaction? The market's reaction was a sell-off, right? Even if you say, oh, I didn't get 137.50s, you would have got 137s because look at the market's reaction, right? The market reacted. Oh, let's retest those 137s. The 137s that right? Same scenario, right? Same scenario. The market hits 137. It re-rallies back up to 137s. What do you see? The long tail, right? The long wick represented by, you guys, I don't know who's buying up here, but we're going short, right? That's exactly what happened right here, right? You see it right here. So even if you were not quite sure about those 137.50s, this was your confirmation right here to nibble, at the very least, nibble a couple of hundred shares, confirmed right here, and the subsequent fall back down to 134s. 134s, what do we say about 134s, right? From the previous day, what do we say about 134s? 134s is our what? It's our support. What happened at the support? Subsequent rebounds. You could have traded this stock all day. Support and resistance, paying attention to the market. You would have clipped points all day on Roku, all day. If you have, the buying power to sit here and buy a couple hundred shares, you would have made out like a bandit on Roku. There's so much movement within the stock. It does get a little choppy later on, but again, you have to wait to see how the market was going to react at those 134s, right? Again, market comes back again on the 18th. The market comes down to 134s. What's the market's reaction? To go back up, right? So it's much easier when you have perspective, right? Perspective is very important when it comes to buying and selling a stock. Again, like here is a perfect example, right? Again, 134s. This is a really good example of where you take 6 points, 7 points out of the market in the span of a morning, right? Like I said before, Roku, 134s confirmed multiple times over the course of the trading week from what is this, the 16th? 134s confirmed on the 17th, confirmed on the 18th to be an area of support. Roku on the 19th goes from 134 to 141, right? Having perspective and having understanding is where you make the big moves in swing trading. And it's what you won't see as a day trader. So if anything, I hope that you take away the value of having perspective as a day swing trader so that you're able to make these big profits, these big moves that most day traders don't make. That's why so many people fail, it's because they just don't understand what's going on in the market. Thanks for watching. Take care. God bless.